If you're trying to find a house in today's market, you know it can seem like an impossible task at times.
This morning, home buyers are running into a new challenge when making an offer in this hot housing market.
And then my offer was declined.
Now we know who's buying up a majority of those homes.
During the pandemic, we saw an extreme rise in home prices. Homeowners were outbidding other homeowners, and we started to see investors buying properties for cash. During this time, a lot of home buyers blamed hedge funds for hiking up prices, making it more difficult for a typical American to purchase their first home. But now that interest rates are higher, home buyers are not outbidding other home buyers, and people are not paying over asking for a specific property. But is that still true for hedge funds? Not exactly. Hedge funds are still aggressively buying properties. Yes, they have adjusted their buying formula, but they're buying just as many houses right now as they were earlier this year. Is this putting a bigger strain on the affordability issue in America? Will this further price out an American from buying their first house? Well, we're going to explore all of that in today's video. Please be sure to like this video, comment down below, and subscribe to this channel for some more awesome content around real estate, personal finance, and the economy as a whole. Hedge funds are buying properties in bulk as the market cools down and there are more discounted properties listed. The hedge fund Blackstone, not to be confused with BlackRock, has recently opened up a fund called the Blackstone Real Estate Partner X, which gives them $50 billion to invest in real estate within the next few years. With that amount of money, how can the average consumer, how can the average home buyer compete with someone that has a fund of $50 billion? Even though home values are declining and people buying homes are decreasing, the percentage of investors, institutional investors buying is still increasing. I would love to know from you all down below, do you all think that institutional buying single family homes, multifamily homes in your neighborhood, is this actually a real issue, or is this such a small percentage of buyers that it doesn't really have an effect on you and me? Now, hedge funds are still buying properties, and they're especially at this time buying properties from new construction builders. I explained in previous videos before, but the sentiment, the confidence of builders have been declining. And as they have these new construction homes in their inventory, they're trying to get rid of them as fast as possible. And that's where institutional investors come in, where a home buyer, they can't buy their houses anymore because of their interest rate and other factors relating to the economy. But a hedge fund, they still have money. They can buy in bulk actually. And so they can actually get a discount from new construction builders in order to move their inventory. And so you see a lot of builders looking at institutional investors or hedge funds as a way to get rid, to offload their inventory so they won't get caught holding the bag. And so these properties that were supposed to go to the average citizen is now going to be sold to institutional investors. Bruce McNeilage, a CEO of a major hedge fund, stated that builders are reaching out to folks like us, the institutional owners of houses, and we're buying in bulk, using those as rental homes. And so you hear it straight from a hedge fund that they're buying homes that were originally supposed to be for average day citizens, but because of the interest rate, because of what's happening with the economy, people are being priced out, or people are not being able to qualify for loans because the interest rate has jumped on them. And so these builders are selling them to institutional investors. So this got me thinking, maybe in the future, builders now are going to set a portion of their building to build specifically to hedge funds, as opposed to regular average day Joes like you and me buying home. Maybe they'll just sell it or make a product specifically made for a hedge fund, because they know, okay, well, this investor, they're going to buy 20 of my houses and they like this amount of bedrooms, this amount of bath. They're not going to be picky about the colors, about this or that, because we know they're going to just rent them out to people. And so I think you're going to see more and more builders having a portion of their business dedicated to just building houses for hedge funds. And I think that's going to make it even harder and lower the inventory for an average day consumer. On top of buying new construction home, a lot of hedge funds are actually going after local flippers who have recently flipped properties around different neighborhoods. According to an October survey by John Burns Real Estate Consulting, U.S. institutional investors purchased 25% of homes flipped in the third quarter of this year, an increase from 22% in the second quarter of 2022. So yes, home values and the housing market is definitely cooling off for third and fourth quarter of this year. But as you can see, the share, the equity, the percentage of institutional investors are still growing. And you see, they're buying new construction homes, they're buying flipped homes. It seems like the newer homes or the better conditioned homes are being bought by these institutional investors. And a lot of homeowners are left with, I guess, the ugly houses that we have to deal with. And so in the future, if they keep on increasing their share of new construction home, sometime in the future, they're going to have a greater share of the market because that's what they buy. Because eventually we're going to tear down old homes and build new homes. And then you're going to have a hedge fund trying to outbid an average homeowner from that home. And so that will increase their market share. Another thing to mention from that study that I was reading was the share of first-time home buyers buying flipped homes fell from 43% in the fourth quarter of 2022 to just 32% in the third quarter. Now, obviously, there are different reasons why the share of institutional investors buying homes is rising while the share of average day typical homeowners are decreasing. And obviously, as I mentioned before, it deals with the interest rate. The 30-year fixed mortgage rate hovers around 7%. And that's still such a shock for an average consumer. Institutional investors, they understand economics, they understand the cycles, and so they're okay with 7%. And plus, they're probably not even paying 7%. Maybe they have some sort of deal, maybe they have financing through deeper means or other factors like that. But yes, their interest rates have increased, but they're more understanding of cycle, and they know in the grand scheme of things, in order to get a house, they're willing to pay a higher interest rate if they can find a good deal now. For the average consumer, we're just going throughout our day by day, buying groceries, taking care of our family. We don't really have a hold on the economy like institutional investors do. And so I think there's still that shock with the interest rate. And so people who want to buy a house, let's say they're in a house and it has a sub-4 interest rate, they're less motivated to sell their home and buy a new home, even though it may be better for them just because the interest rate is higher. And so that's decreasing the pool of applicants, of homeowners wanting to buy the property because of interest rate, because they're not wanting to sell their home that has a lower interest rate. The other reason why the share of institutional investors are growing is because they can pay in cash, right? And so if you just flipped a home and you want to get your money back, get your profit, and a hedge fund comes your way and they're going to pay cash, you're most likely going to take that offer. But I mean, you never know. Maybe there are people that are understanding the economics and they want to preserve a neighborhood, and they're all like, hey, we'll hold off on your offer right now. We want to see if we can sell this to a family that wants to buy it instead of selling it to a big hedge fund. But for the most part, most investors, most people flipping houses, most new construction builders are trying to run through their inventory as fast as possible. And so if an offer comes in cash from a hedge fund, they'll take it. And the other reason why I think home buyers are not buying as much is because of inflation. They're paying higher costs for their food, for their gas, for other energy costs. And so right now, maybe it's not the best time for them to purchase a home because they're paying more in other areas of their life. So I guess learning all of this, what is something that we can do as a small-time investor like myself, or just an average consumer during this time? Well, to start off with, hedge funds still only represent a very small percentage of the whole market. They still only represent 1.5% of 23 million single family properties that are out there. So it's not as much of a issue as a lot of people and news outlet, claim to be. I do think that share is growing and is something to consider in the future. So I would advise people that if you want to buy a single family property, if you want to buy a home, don't get so shocked by an interest rate, right? If the numbers and the payment still works for you, still get that house, right? It doesn't matter if it's 4% or 7%. If it still fits in your budget, if it's, I like to go 1/4 or less of your income, take that house, make sure you're able to pay your bills and everything. Because yes, the interest rate can go higher, but the price of the home can go lower, and you can offer lower than asking price now these days. So you'd be surprised how low a seller could go. I think another thing to consider when talking about the institutional investors hold on the market, even though it's still super low, it may take a few years until we really see their control and impact on the market, because real estate usually takes a while to show its shame. It takes a while until the recession really shows in the housing market, or the depression or anything like that. And so it may take a couple years until we see, whoa, there's just all houses on this road that are owned by institutional investors, and they're all renting them out to people. Doug Green, owner of a Philadelphia-based Signature Properties, told Bankrate in August that when a hedge fund comes in and buys up a bunch of single family properties, those houses are gone. And if they ever decide to sell, it will be to another large institution, which means they may never come back onto the market for the regular home buyer. So essentially, institutional investors, hedge funds, they sell to other hedge funds. And so once they are sold, they're essentially gone. I think that's one thing that you can consider if you're looking to sell your home and a hedge fund comes your way. You're essentially letting go of that property forever. You're letting go of a family actually taking ownership of a property for a long time. Yes, I think there are cases where hedge funds sell to homeowners, but the vast majority sells to other hedge funds. And so if you're selling a home, yes, I know the cash is right there and they're offering you a good offer and they're probably close fast, but really stop and consider, selling that property if you really care about building a neighborhood or building a community around you, because ultimately all these things start with us. And yes, we could put a lot of blame on hedge funds and institutional buyers, but essentially we help them out, right? We sell them our property. Even as wholesalers, we sell to other hedge funds. And let me tell you, I don't think there's nothing wrong with selling to an investor. I think, there are times when, hey, you need to sell to an investor because no one wants to buy your house, right? And an investor is the only person in this particular situation that wants to buy your house because the condition, because you need to sell in 2 weeks, because you need this cash right now. And so, yes, do that. That's why you have these opportunities. But if you have more time, if you have a nice house, you should really consider selling your house to a family or to an individual instead of selling it to a big time corporation. And so I think that's one of the main points of today's video is that yes, hedge funds are still buying up properties like crazy. They haven't slowed down. Yes, they have adjusted their buying criteria. They're not going to pay over asking like everyone else was doing earlier this year, but they're still buying as many properties as they were before. And so I think for me as a small time investor, right, I want to buy your house, I want to buy properties, but I'm not no billion-dollar hedge fund that's trying to just control a whole neighborhood. Yes, it would be cool to own a couple properties on a block, but is that the same as a hedge fund? Is it? Am I being two-faced with it? But I just feel like I'm a local investor, so it's a little bit different. I just think that in the future, the more and more hedge funds are buying properties, is that going to make a bigger impact on the affordability issue? And that's been the main issue throughout my previous videos that I've been trying to harp on. It's just this affordability issue. Are the things that we're doing affecting us worse and making it harder for inflation to go down? Let me know down below your thoughts on institutional buying in your area. What's your experience? Have people done it in your area? Have you had firsthand experience selling or buying from one, or maybe being outbid by one when you were trying to buy a house? Let me know down below in the comments. All right, talk to y'all later.